What's up guys, welcome back to another video. In this video I'm going to be teaching you all you need to know about market structure, about changing structure, break of structure, everything you need to know about market structure and a trading strategy behind market structure. So first of all, obviously you have your basic market structure, which I'll draw for you now. Hopefully you guys understand this already, but if you don't, I'll quickly go over it. So you have what makes market structure is your bullish and bearish and consolidation. So in this video I'll be talking about a bullish scenario, and I'll also be explaining the bearish. So as you can see, this is a bullish pattern right here because we are creating higher highs, higher lows, higher highs, higher lows, and higher highs and higher lows. Now, every time a higher low breaks the higher high, there is a break of structure. So if we mark that right there, this is a BOS, a break of structure. So if you ever see that in somebody's chart, a BOS means break of structure. So there is a break of structure there. There's a break of structure here, because as you can see, this higher low breaks this higher high, so therefore there is a break of structure right there, and that means there is also a break of structure right here. Now it is the same for a bearish pattern. So here we go, we have just our regular bearish scenario, creating lower lows, lower highs, lower lows, lower highs, lower lows, and lower highs. So the break of structure comes every time the lower high breaks the lower low. So as you can see right here, this lower high breaks the lower low, so there is a BOS, a break of structure. So you need to be able to identify that when you are trading with smart money concepts. So when we are using this trading strategy that I'm going to show you, you need to be able to identify a break of structure. So there's a break of structure there, there's a break of structure there, there's a break of structure there. So don't get confused when I say break of structure. All break of structure means when the higher low breaks the lower low in the bearish scenario, or in the bullish scenario when the higher low breaks the higher high. That is all a break of structure. Then what we can look at next is, this is on a higher time frame. So say these candles all on a higher time frame. So let's say we look at the chart on a lower time frame. So these candles right now are on a lower time frame. So what we'll see on a lower time frame is we'll see a downtrend on the smaller time frame, and the downtrend will trade into this area right here, and this area is our demand zone. So once this area here comes into our demand zone, we are waiting for a change in market structure. So this would be a change in market structure. So if this price then comes back up, breaking the most recent lower high. So as you can see here, we have our move to the upside right here. This is in a 4-hour time frame, let's say. So all these black candles are in a 4-hour time frame. Let me change the color on this so it makes it easier for you guys. And then the blue lines are all on a lower time frame. So as you can see, these blue lines, let's say this chart is on a 1-hour time frame. So in the lower time frames, you will see a bearish market structure being formed, and then that market structure will trade into our demand zone here, which would be created from this market structure. So the price will trade into our demand zone, and then once we see a change in a shift in the market, so a CH, this is when the market shifts. There is a change in the structure of the market. So the lower low here, instead of this lower low making a lower high, it actually makes a higher high. So what that means is this candle right here breaks the higher high instead of carrying on the downtrend. So it just cancels out the downtrend. So once that happens, there is a change in character. So that is what the CH means. And then once we get a pullback, this is when we will enter into our position right here. So this would also be a demand zone on the lower time frame. So if we look right here, and I'll be showing you guys a chart example so you guys can understand it after. This is just so you guys can get the basics. So then this would change into a demand zone. So I'll draw that out again so hopefully you guys can understand. So we have our market structure to the upside. So say this is a 4-hour time frame. Then on a lower time frame, we have this movement downwards. So this movement is trading into our demand zone, which would be around this point. Then these candles will then break market structure, have a change in character, so that it breaks this most recent lower high, creating a higher high, and then we would look for an entry around here in another demand zone, and then we'll target profits up there. So let me just mark this out for you. So we get our break of structure, we keep getting break of structure to the upside, and then on a lower time frame, so this right here is a lower time frame, we'll get a downwards movement, and that downward movement would come into our demand zone. So there'll be a demand zone right here. Then we'd get a change in character. So as you can see right here, this is a change in character, a CH. That is all that means. So see how this candle right here, instead of making another lower high, it breaks this most recent higher low. So that is a change in character. And then once we see that, after this market structure is changed into our demand zone, then we can look for an entry. So as I've said, I'll show this to you on a chart. This is extremely simple strategy and very effective, but you must know this and you must try and master smart money concepts and market structure. So now if we go to the actual chart, which is down here, so I have drawn the bullish example out for you guys already, just so whilst I show you the chart example, you can look at the line example if you guys find this a bit more clearer. So as we can see, if we zoom out a bit, we have our bullish trend. We are creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Okay, so we have this big bullish trend, as you can clearly see. So what we are looking for, if we go to the lower time frame, so we go to the 1 hour time frame, I was just on the 4 hour time frame, we have the movements downwards. So let me get my tool. So we are creating lower highs, higher lows, lower lows, lower highs, nearly creating a lower low there. So let's just mark that out. Lower low, lower high, lower low. Then this trades into our demand zone. So then what are we waiting for? So as you can see, our demand zone is here. So then after this is traded into our demand zone, we are waiting for a change in character. So let me go to the 30-minute time frame to show you guys. So we have this downwards movement coming into our demand zone, as I showed you up here. So here we go. We have this is what I'm showing you. We have this downwards movement right here coming into our demand zone. So it taps into our demand zone. So if we look at the chart, we have this downwards movement right here tapping into our demand zone. Then we wait for a change in market structure, a change of character. So as you can see, this candle breaks the most recent higher low, so we get a change in market structure, a change in character. So then what do? We mark it out. So I've already marked it out for you, and then we wait for a retest. We wait for a pullback. We wait for a pullback into our demand zone. So as we can see, the price has not pulled back yet. Then we have a lovely demand zone right here. So we get a rectangle tool, we mark out a demand zone, we drag it across, price perfectly trades into this demand zone. So this is where we would take the entry of a long position right here, stop loss just below the demand zone, take profit at the most recent high, which would be right here. There we go, and that is the trading strategy. It's very simple. So remember, all you're looking for is for the price to be very bullish, so for the price action to keep breaking, break of structure to the highs. As you can see, break of structure there, break of structure there, break of structure there. The price keeps breaking and forming bullish market structure. Then we want the price to have a pullback in the lower time frames into our demand zone. And then once we have that, we wait for a change of character in the market, which is right here. Then after we get that change of character, we wait for a pullback into another demand zone, which is right there. So this is at demand zone. Then we look for an entry and we take our profits. Now, if you trade this right with the right risk management, this is a very easy strategy and extremely profitable strategy. So yeah, I hope this is very simple and easy for you guys to understand. Make sure you guys follow my Instagram at tradinglouisyt. I give you guys lots of free content over there. So yeah, I hope this video was very useful. Make sure you subscribe and like. Thank you for watching.